But some analysts feel there are other factors at play driving up oil prices. Matt Keiser is a journalist and talk show host who specializes in world financial markets. My colleague Anna Naidu spoke to him earlier and asked him just what he thought was driving up world oil prices.
Well, the two primary factors why the price of oil is going up right now is the world production of oil has peaked around 86 million barrels per day. Doesn't look like there's going to be any more of an increase in production on a daily basis. Even after the invasion and occupation of Iraq, that number is not going to increase to the current 86 million dollars a barrel level, which is in fact peak oil. The second reason is that oil is priced in dollars, and there's a need in America to bail out the speculative banking establishment by printing more dollars. And since you print more dollars, it makes the things priced in dollars like oil go up. Speculation, really, it's not the primary factor.
Those numbers that you're talking about, limited supply and the dropping value of the dollar, is it likely that those numbers could change in the short term?
The demand side of the equation is continuing quite briskly all over the world, and the supply is just not there. I mean, okay, in Saudi Arabia this weekend they're talking about adding some supply online, but at the same time, the amount they're talking about and adding on supply was just taken off the market this weekend in Nigeria by the rebels in Nigeria. So that's a wash. That's already, whatever Saudi Arabia was thinking about doing to add supply, it's no longer a factor.
Why has there been such a rapid increase in the price of oil in the last year? It took about 5 years, from 2002 to 2007, for oil to get up to $60 a barrel. And it's gone more than double that now in just the past year.
Yes, I will explain why that happened. Last summer was the end of a 25-year bull market in bonds, which means that all the financial engineering and accounting tricks on Wall Street and on the Enrons of the world came to an abrupt end. So these banks, in order to save themselves, to save their bonuses, to save their salaries, have flooded the market with more credit, more dollars, and of course this has the effect of debasing the value of dollars, which means it takes more dollars to buy the same amount of oil. This is not a function of oil per se, it's a function of the dollar. The dollar is the key component, and the dollar is getting shellacked all over the world as countries decide that they can't sponsor or underwrite America's economy anymore. You know, America borrows something like $3 billion a day just to keep the lights on. When foreign creditors decide that they're not interested in supporting this deadbeat, this welfare state known as the United States of America, and they get out of dollars, price of oil is going to continue to march upward and onward. And the big loser is the United States. It's a game of poker, and I'm afraid the U.S. has the weakest hand.
That was economic analyst Max Keiser talking to me earlier.